Hi everyone, I'm Jeremy. Today I would like to tell you why every trader should use trading indicators and what indicators are the most popular and helpful in trading. Okay, let's get started. First, let's speak about what trading indicators are and why you need them when you trade with real money. Trading indicators, also known as technical indicators, are tools that help traders spot the best entry and exit points, identify market trends and trend directions, and forecast future price movements. This is what they are needed for and why all experienced traders use technical indicators. From a technical point of view, trading indicators are mathematical formulas or calculations that are based on past data, historical prices and volume, to help predict future price movements or identify current trends. There are hundreds of technical indicators, and of course it's impossible to know how each indicator works. And honestly, I don't think it's necessary. You can gradually study the most popular ones and then start adding them to your trading chart. Once you get an idea of how the most popular indicators work, you can choose some and apply them to your trading. Personally, I use 2 or 3 indicators at a time, depending on my trading purpose and style. Let's say you are a scalper. Scalpers open lots of short-term positions within the same day without transferring them to the next trading day. For positions that get closed out after some seconds or minutes, you will most likely need some signals that might help you enter and exit the market in time. These signals can be provided by technical indicators. If you prefer day trading and intend to make profits on small market moves with positions held open from several minutes to several hours, then technical indicators can help you manage your trading activity better too. If you are a position trader and hold positions open for days and weeks, you can also use technical indicators, which are great for getting a bigger picture of the market. However, I would suggest combining them with fundamental analysis tools. Anyway, my idea is this. First, identify your trading style and decide if you prefer fast trading or if your trading approach is more like investing. Depending on this, you may opt for either technical indicators or fundamental analysis tools, or maybe you will decide to use both. Okay, now let's take a look at some of the most widely used trading indicators. I will show you how they work. The first indicator I'd like to tell you about is called moving averages. A moving average is a very popular indicator. Why? First, it helps you identify the direction of the trend. So if you are trading in a trending market, this indicator will suit you well. Secondly, it is part of some other technical indicators. So, knowing how it works, you can understand other indicators too. The moving average indicator has several variations: the simple moving average, SMA, the exponential moving average, EMA, the weighted moving average, and some other types. Today, I will show you how the simple moving average, SMA, indicator works. SMA calculates an average arithmetical value for a period you choose. Let's see how it works on the IQ option platform. Now I will add the SMA to my chart. First, I go to the lower left corner of the chart and find indicators there. Then I choose moving averages. Okay, now I should set up the indicator parameters. In the settings section, I should decide on the period, how many candles the indicator should include to calculate an average of closing prices. By default, the period is set at 14, which means the indicator will be calculating an average of closing prices for the previous 14 candles. Then the indicator will move one candlestick forward and make the same calculations taking into account a new candlestick. If you choose, let's say, a period of 5 candles, the indicator will calculate the price average for the previous 5 candles. If you choose 20 as your period, the indicator will calculate the price average for 20 candles, and so on. So, the SMA divides the sum of the closing prices by the number of candles you select. If you prefer long-term trading, let's say for weeks or months, you may consider choosing a period of 50 or more, 200 for example, to get a better idea of how the asset price has changed over a longer period of time. Since I prefer day trading, I use default settings. If you increase the period, the sensitivity to price changes will lower too. Anyway, it's always your choice, so you can alter the period as you wish, adjusting it to your trading style. So, the indicator type remains unchanged, SMA, as we are looking at this indicator now. Color and thickness, I prefer default settings, but you can alter the color here and the thickness of the line too. Then click Apply and the indicator will appear on the chart. So, here is what it looks like on the chart. Depending on the average prices calculated by the indicator, you will see either a line that is moving upwards or a line that is moving downwards, thus showing you the current trend so that you can decide whether to open a long position or a short one. That is why it is called moving average. The advantage of the indicator is that it smooths price surges by indicating the current trend, helping you in your trading. So, following the direction of the indicator line, you can make your decision about when to buy or sell an asset. Another indicator I wanted to tell you about today is called RSI, the Relative Strength Index. This indicator is useful for identifying trend strength and potential reversal points. So, the same as we did to add moving averages to our chart, we tap the indicator's icon and add RSI from that menu. In the basic settings, we select the default values or modify them. So, what do we see here? The indicator will be shown on a chart as 3 lines. Baseline, it corresponds to the candlestick period. By default, it's 14, which means the indicator calculates 14 candles. The other 2 lines represent overbought and oversold levels. Their default values are 70 and 30. As usual, I prefer using default settings, but if you would like to change them, no problem. So, how does it work? We should pay attention to how the baseline behaves. When it breaks through the overbought level and starts moving downwards, we may consider this as a signal for selling an asset. On the contrary, when the baseline breaks through the oversold level and goes up, it might be a signal to buy an asset. If the baseline just touches the overbought or the oversold levels, these are not signals for buying or selling. You should wait till the real signals appear and then enter or exit the market. Okay, let's open a position based on the RSI signal. Using indicators is important, but you should always keep in mind that you cannot rely on indicators only. Remember, there does not exist an indicator that gives you 100% accurate signals. So, experienced traders often use combinations of indicators to confirm signals and make decisions. Well, this is what I wanted to share with you today. Hope you have found this video useful and interesting. If so, like, share, subscribe and hit the bell to get notifications from our channel. Stay tuned, watch our next episodes and make your trading as enjoyable as possible with IQ Option. Cheers and see you next time. Bye.